Joining me now to provide insights on the day's market performance is Nader from Benguela Global Fund Managers. Grant, thanks so much for your time this afternoon.
Good afternoon.
So some positive news coming through. US and Chinese officials are set to meet this weekend in Switzerland for a round of trade talks. Markets not really reacting. I thought we would see green screens across the board. Are we just seeing traders take a more wait and see approach because we don't know what may come out of the talks?
Yeah, good afternoon. I think, remember, we've already rallied strongly. I mean, the markets are higher now than they were before or the day of that tariff announcement from Trump. So a lot of this improving outlook has been baked in. The S&P, I think, is up 17% from the April 7 lows. So a lot of this has been expected, I think. And so what you're seeing is, okay, now what? So we're getting the talks, we're getting the potential for an easing intentions.
Yeah.
But when and how this plays out is yet to be seen. So I don't think there's a catalyst here to keep buying. I think there needs to be a consolidation around these levels and wait for some further clarity.
So some profit taking, as you know, uncertainty remains the name of the game. Meanwhile, in China, you know, they're doing what they can to shore up the economy. The People's Bank of China today cut the 7-day reverse repo rate to 1.4% and delivered a 50 basis point cut to the reserve requirement ratio, releasing about 1 trillion yuan into the market. What did you make of the timing of the move? I mean, you know, with what we have right now playing out between both Washington and Beijing.
I think the move. I think it's important because even as they start talks, it could be a long time before they come to a resolution. And in the meantime, economies are slowing, and so the authorities are concerned. We've been expecting more stimulus out of China, and so seeing that to me is not unexpected. The question I have is it enough? And it probably still isn't enough, depending on how these negotiations go. And I don't think it's going to be a simple process to get an agreement over the line.
Do you think we potentially need more stimulus targeted at consumption? Because we do know that there really is a demand issue domestically in China as well.
Yeah, I think 100% right. So that, freeing up credit is not the problem. There's not a demand for credit that's not being met. There's a consumption that's not being filled, and they are literally in a deflationary environment. They've now got even more goods they're not exporting, so prices are falling and consumers are uncertain and they're not spending. There's plenty of capacity to spend there and to borrow as it currently stands. So I'm not sure it's the right stimulus. It's still better than nothing, but it isn't targeted enough in terms of their fundamental needs at this point. So I think you're 100% right on that.
All right, let's move over to some company news. Novo Nordisk released first quarter results, profit beating expectations, but the forecast for 2025 not looking as good. The group lowering its outlook amid intensifying competition in the weight loss market. I mean, a few weeks ago, we heard of Eli Lilly making progress with its one daily pill. So I guess, a really competitive space.
Yeah, it is very competitive, and it feels at this point that Eli Lilly has the advantage in terms of they already have the pill, they have the oral dose, and Novo has also got its own product, but it's still further behind in development. And then, of course, there's been these generics that are pressuring sales as well.
Yeah.
I think, however, that these two will continue to win overall because they have the brand value, they have the leadership in the technology, and I think this is a very powerful space that will continue to grow. But any company in this environment should take the opportunity to talk down expectations because there's so much uncertainty that's still out there.
Yeah. And I mean, it doesn't seem like that outlook has spooked traders as much because the share price is up 5.8%. Let's move over to some local company news. Grant, DRD Gold warning that it might not meet its 2025 full year production guidance. This after gold output fell about 12% in its third quarter. Your analysis on that update, I mean, rains in Gauteng really hampering the company's performance.
Yeah, so this is seasonally a poor production quarter for the miners, given all of the rains and other kinds of disruption. We saw similar production shortfall out of Harmony, but I think the longer term picture remains intact for all of these miners. The gold price is incredibly favorable here. the big challenge as well for them is to keep costs, a lid on costs, because it's easy to let costs blow out while the gold price is so high. But what happens if gold pulls back and then you've got these embedded costs? So on balance, production numbers are not great, but they're okay given where we are in the cycle.
All right, let's move over to APSA, where we've seen shake-up in leadership there. Chair Sello Moloko stepping down, and Renee van Wyk, who also served as interim CEO, will be taking up the position from mid-July. Just your analysis on that move, Grant, and what it suggests when it comes to stability at APSA. You know, we know that there's been so much movement and changes in those top spots.
Yeah, I mean, this has been a persistent issue for a number of years now at AMSA, and not what you'd want to see. There's no obvious reason as to why he stepped down. And then, this is a challenge, and you need a clear and obvious strategic direction. They're in a market that's fiercely competitive. They're ceding market share to the likes of Capitec in certain areas. And so, it is a concern. The best thing they have going for them at the moment is that they're cheap from an investor's point of view. But in terms of market position and strategic direction, it does raise further, it embeds the concerns a bit further.
Yeah. And before we get into our stock pick segment, Tech also out with a update this morning. They expect full year earnings to be as much as 83% higher. What did you make of that update, Grant?
It's not a company I follow closely, but the last year or two, they've been delivering incredibly well and consistently. It's flying below the radar. I think people have stopped looking closely enough at this one, and I think there's an opportunity there. Yes, it's had a decent move, but I think there's probably still further opportunity. They do seem to be well positioned, and also a decent rand hedge given the global operations.
Yeah. All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on some counters that have been attracting interest from your industry peers.
I'm going with Bidcorp. Bidcorp has showed some very stellar results in their last print, and I mean, they're well diversified across the globe. 33 countries, and their balance sheet is still looking quite well at this point, and reasonably, the valuations are quite attractive as well. So I think that because of that and the strategic push right now to try and get more distribution centers across the 30 other countries is quite good for them, and I think that they're well positioned, and that's why I'm going with them.
I'm going with Pepco, but I really want to focus on the other divisions outside of the core clothing general merchandise division of Pepco. So, Pepco has Pep and Ackermans, which are the big clothing businesses within the stable, and that's very value oriented. They do well throughout different cycles and have a very loyal customer base. But the other two divisions that I want to focus on is really the fintech side, which is the credit book. They've got a credit book that has been expanding quite nicely, and they're increasingly participating in that credit space. So I think if you look at the overall profile in terms of bad debt, still very healthy in terms of the bad debt ratios, and they have much more room to grow their credit book. Secondly, they've got the cellular business, and whereby they offer cellular phones in terms of a rental facility, whereby the consumer can essentially have their number for life. So that brings in a bit of stickiness to the consumer, and that's also growing nicely.
So MTS going with Pepco and Odwa picking Bidcorp. Just your analysis on those counters, Grant?
Well, I actually like both of them. So Bidcorp, I think, is one of those consistent compounders. It's defensive, it's global, it has a very strong place in any diversified portfolio in South Africa, and so I think I would certainly be comfortable owning that one. Pepco as well, obviously it's a cyclical, it's discretionary retail, but they are well entrenched in their base, in their particular LSM where they play. Management is executing well, and now they're finding areas of growth in other verticals, both in credit, in fintech, and they're moving into other areas where they're not currently positioned, adult wear, they're improving in that space. So I like the story there. I like the opportunity in Pepco as well, and I think it's both good businesses. I think you can buy both of those.
And I mean, you mentioned Pepco's going into adult wear. I think in that acquisition, the odd acquisition there was Boardman's. What did you make of that?
I didn't even know boardrooms were still open. So, I did think that was odd. It was probably just incidental in the
Yeah.
acquisition. We'll see if they. I mean, they do have Pep Home,
Yeah.
so perhaps there's some synergies there, and they want to revive that brand. I mean, given that we still talk about it, I remember the brand. I haven't seen a Boardman store for 15 years, so yeah, maybe there's something there.
Yeah, and I think it's just online now, so I don't think they actually have physical stores anymore.
Okay.
But
That
where,
explains why I haven't
yes,
seen
that's
the
why you
store.
haven't seen it. All right, where are you seeing opportunity at the moment? What's your stock pick, Grant?
So I'm going with Karoo. It's a little gem. It consistently delivers. The challenge here is it's very illiquid. It's listed in SA and on the Nasdaq. It's the old car track. They're by far the market leader in tracking and IoT services. And of course, it's a lot of it is annuity business, which is great. A lot of it is like software as a service. There's a huge amount of data involved in this process. And of course, in this age of AI and data analytics, this becomes a treasure trove of opportunity. This company is growing. They've been growing earnings in the high teens and 20s for a number of years now. I think they will continue to do that. They're investing heavily for growth in Southeast Asia, Asia Pacific as one of their primary growth markets. I think that's nearly 20% of the revenue and profits for the business, and they continue to invest for that growth. So you've got a great South African core business, and then you've got this lovely growth trajectory in other regions in the world, mostly in Asia. And I think this management's track record of execution, cost management, and capital allocation is stellar. So if it wasn't so illiquid, I think we'd probably hold it in the funds that we run as well.
All right, Grant, thanks so much for your time and just sharing your insights of trade at midday. That was Grant Nader from Benguela Global Fund Managers.